Square's fall from grace. Has this promising fintech company lost its way, or is it just getting started? Today, we're talking about Block Inc., or formerly known as Square, which since its IPO in 2015 have been considered one of the top fintech companies in the entire world. Its visionary technology founder and CEO Jack Dorsey seemed to be making all of the right moves. Thus, the company's stock ran from $9 at IPO in November 2015 to over $276 in early 2021. Since then, however, the stock has been cut in half as skepticism grows around some moves happening at the company and its path forward. In addition to this, the company's latest earnings report, not that hot. So here's the format: a brief refresher on the company overview, then the seller ecosystem, then their Cash App ecosystem, why investors are concerned today, and why they still have a chance. But first, I want to share a quick word from the sponsor of today's video, Morning Brew. Before Morning Brew, honestly, I would usually start my morning not really knowing what else is going on in the world outside of stocks. And even then, it's just a quick peek at maybe Yahoo Finance. I didn't have a go-to news outlet or source of information. But now with Morning Brew, I'm able to get up to speed on not only with stocks, but also crypto, the business world, health, science, tech, you name it. As someone who loves finance and entrepreneurship and anything techie or cutting edge, it's been a great time. And I love how the Morning Brew authors all write with personality. They each have a witty, relevant writing style that just makes it a lot more enjoyable and easy to read. In the past week with Morning Brew, I've learned that Tesla's Fremont plant in California is actually the most productive auto factory in all of North America, making 8,550 cars per week. I also learned that Google is being sued by several states for deceiving users about when it was tracking their location. I see it as a great resource that will keep me up to date on stocks and companies that I'm either interested in or invested in. So it really just made sense to sign up. There's really no reason not to subscribe to Morning Brew if you're interested in business, finance, or tech. It is completely free and it takes less than 15 seconds to subscribe. So click the link in my description to subscribe today. The company mainly operates in two worlds, the seller ecosystem and the Cash App ecosystem. The seller ecosystem refers to the small to medium businesses that Square works with. They offer a point of sales, payroll, banking, management, hardware, and much more. This played a major role in leveling the playing field for smaller businesses to thrive. In 2020 alone, the company processed over $100 billion of gross payment volume, which was generated by over 2 billion card payments from 405 million unique payment cards across a variety of industries as seen here. All you really need to know about the seller ecosystem is that Block tries to provide small to medium-sized businesses with all the tools that they would need to grow and scale their business. Next up is the Cash App ecosystem. The Cash App ecosystem stems from their massively popular Cash App. Cash App enables direct deposits, peer-to-peer transactions, Bitcoin trading, investing, and they also have their own debit card, the Square Cash Card. When it comes to peer-to-peer transactions, most people say Venmo is the de facto leader, but Cash App has seen dramatic growth in the new customer acquisition and retention of its client base. In December 2020, Cash App had more than 36 million monthly transacting active customers, up more than 50% year over year. By growing this network of users so quickly, the company has super low customer acquisition cost, which is below $5 per user in 2020, and Square said that historical Cash App cohorts generate a return of investment of 6x or greater over 3 years. This low customer acquisition cost is a huge part of driving their returns. Block believes that the Cash App ecosystem is a key differentiator as many users are beginning to adopt more and more features on the platform beyond just the peer-to-peer cash transfers. Products like the Cash Card and Bitcoin are being used within the first month more and more frequently, and as crypto becomes more popular, Cash App saw 3 million Bitcoin active customers in 2020, and more than 1 million customers purchased Bitcoin for the first time in January 2021. More on this later in the video. The growth and power of the Square, now Block, platforms led to some insane stock price performance. From early 2017 through February 2020, so before the global situation happened, SQ shares shot up over 450%. But once Rona hit, the power of the Square ecosystem and the transition to a highly digitized environment really made the stock take off even more. From the end of February 2020 to its peak in February 2021, shares were up 230% in just 1 year. So what happened next? As we can see in the last year, shares have taken a pretty hard hit and they're down over 50% from their recent peak. Well, let's take a look at some of the biggest things causing concern for the investor community. I'm just talking about the investor community in general, not the actual, investor community. Some nice merch, by the way. not for sale, exclusive. Let's continue. On November 4th, 2021, Square or Block announced Q3 2021 earnings, which were rather underwhelming to investors. Net revenue and gross payment volume missed analyst expectations, and Cash App growth was actually slowing. As a result, analysts such as Susquehanna and James Friedman are starting to be concerned about growth. Friedman said, "We now expect Cash App year-over-year growth to slow from 68% in 2021 to 18% in 2022. Now, whether or not you can trust those numbers, I'm not sure. I still think it'll be a little bit better than that." In addition to potentially slower growth, on August 1st, 2021, Square announced a $29 billion acquisition of a company called Afterpay. Afterpay is an Australian-based consumer lending company that competed in the buy now, pay later space. Buy now, pay later companies, or BNPL, let you make a purchase and have some kind of credit arrangement, allowing you to actually pay for the purchase later on or over a period of time. These companies allow people who might not be able to make a large purchase or even a smaller purchase right away. They let them pay for it in a way that works for each person's situation. The main concern here was how much money Block paid for this acquisition. $29 billion. That's a 31% premium to Afterpay's share price at that time, and 42 times Afterpay's trailing 12-month revenue, which is ridiculously expensive. While this acquisition could serve as a growth catalyst, it certainly comes with its risks, and it's going to be a while before they really make that money worth it. And on December 1st, 2021, Square rebranded as Block. Under Jack Dorsey, Square has put a big bet on Bitcoin, say that 10 times fast. In July 2021, the company announced it was planning to create a new business line to help developers build financial service products focused on Bitcoin. Additionally, in November, the company said that Cash App will now support Taproot, software upgrade to the Bitcoin blockchain that is intended to make the network more secure, flexible, and scalable. Users can send Bitcoin to Taproot-enabled wallets as well. The company is also interested in developing a Bitcoin hardware wallet and open Bitcoin mining systems. All this crypto inspiration might be a leading indicator of where this company is heading. In fact, it definitely is. And with the rebranding to Block, the blockchain is certainly a big part of the company's future. But again, this may cause some concern for investors who initially bought into Square with a thesis behind Cash App and their seller ecosystem, and not so much their ventures and bets on BTC. Finally, if this trend continues, we actually could start to see a stronger and stronger correlation between SQ's stock price and Bitcoin's price, which again could be very unattractive to some investors. But now that we've hit the points that many investors are concerned about, there are some points worth noting that are positive that we should briefly mention. The X factor, if you will, that we haven't fully touched on yet is the CEO Jack Dorsey. Up until November 29th, Jack Dorsey was CEO of two major public tech companies, of course Twitter and Square. Both companies he founded. The highly successful tech entrepreneur and 45-year-old Jack Dorsey is often ahead of the curve in terms of innovation. However, in his past, he was often criticized for his either lack of focus or lack of execution when serving as the CEO of two separate companies. But again, on November 29th, Dorsey resigned as CEO of Twitter and decided to go full-time with the CEO role at Square, now Block. This should help him on both of those criticisms of that lack of focus and that lack of execution. That said, Dorsey may still be considered a bit of a wild card while sitting in the CEO chair at Block if he starts to take it down the blockchain route more heavily than focusing on the seller and Cash App ecosystems, which again is the bread and butter of why investors like this stock to begin with. Now, the other positive thing worth mentioning is a shift to the digital world. Whether it's moving away from cash purchases, more online shopping, or even a shift to cryptocurrency adoption, all of these trends seem to be accelerating pretty rapidly and are likely here to stay. When looking at businesses that have been with Square since 2015, there seems to be a consistent story of cash becoming less and less widely used for purchases. This accelerated even more in 2020, but even pre-Roni Rona, there was a pretty consistent annual decline in cash usage. While the vast majority of businesses will continue to accept cash, the more transactions that go digital, the better it is for Square. For example, on March 1st, 2021, just 8% of US Square sellers were effectively cashless. Just 2 months later, on April 23rd, that number had jumped to 31% of their sellers being effectively cashless. And in the past few years, the share of the US businesses that are accepting online payments has jumped from 25% to almost 50%. In 2019, pre-Roni Rona, about 25 to 30% of US businesses accepted online payments. But once the global illness struck, this quickly jumped to 40 to 45%, and early data from 2021 showed that this number was already higher and nearing 50%. This trend also isn't just happening in the US, with actually the biggest shift to cashless transactions being seen in countries such as Australia, Canada, and Great Britain. So what do you think? Is Square spread too thin? Is Dorsey going to be able to maintain focus? And is this the same company that you intended to invest in a year ago? If you enjoyed, please make sure to hit that like button, subscribe, and I'll see you in the next one.